Welcome to TradingStocksLive.com. What I want to show you guys today is what a gap is in the market and how you can benefit from a gap financially. Most stocks do gap opening, or a stock may gap down. Now, for those of you who trade Forex, you may not see a gap. Forex normally, or currencies normally do not gap. We see a lot of gaps, particularly in the New York Stock Exchange, because these markets are controlled, or these exchanges are controlled by specialists, and there's a lot of overnight trading, which gives us gaps. So you guys can Google gaps and kind of figure out, what exactly gaps are, and the exact definition, and you just do a lot of research. But what we're going to look at right now is the charts and how we as traders can benefit financially from these gaps. The first stock I want to look at again is Take-Two Interactive Software, TTWF. Okay, let's take a look at 12309. 12309, December. The last stock price, the last trade was that was recorded was $10.92, almost $11. The very next day, the stock opened up at $7.50. So anyone who had a stock, who had this stock, I know they're wondering, wow, I had a stock that closed on the 3rd. On the 3rd, December 3rd, right before Christmas, when that's the time to kind of get ready for Christmas, and to buy presents and be in the holiday spirit right after Thanksgiving. And here it is, you have a stock. Imagine you have a stock that just closes at $10.92, almost $11. So on 1,000 shares, that investment, that's almost $11,000. So the very next day, you pick up the paper, you look at online, and you see that same investment is only $7,074, or I'm sorry, $7,740. Whatever the case, you're down significantly. Now, one of the main things you don't want to do, well, first of all, you want to understand what a gap is. A gap can occur because of overnight trading, because of bad news, or whatever the case. But we see this particular bar right here, this guy right here. Let's see if we can get an arrow on him. This is the reason why you see that gap. Let's get it right here. This gap is because of this volume right here. This volume is selling. That's distribution. That stock is being heavily distributed overnight. So you wake up the next morning and you're down $2,000, $3,000, $4,000. So let's plot this area. Let's plot this area, because this area extends from the close of the 3rd to the open of the 4th. Now this area right here normally will be filled, meaning that normally the stock will rise up and touch this point. It will fill this gap area. This is a window. This is a gap area. And as we can see, the stock didn't waste any time. It didn't waste any time. Over the next week, what happened? The stock traveled up. It traveled up. Okay, it traveled up, but it didn't quite come here. But in fact, it traveled up so fast that it even gapped up to fill this gap area. You see? So this area that was voided, in this from the point of the close of from almost 11 to 770, this $2,000, $3,000, $4,000 area right here, it was filled. You see, within a relatively short period of time, actually. So a lot of times when you see a stock gap down, don't necessarily sell, because if you do sell, what will happen is that a lot of times, more often than not, the stock goes up to fill the gap right where you left off at. So we see a lot of investors sell right here, which is what they're trying to do is break even, because they're trying to get ready for Christmas, or whatever the situation may be. Okay, so that's the first gap. Now there's another area of interest for us right here. On the way that this stock was filling the gap is another area, which is here. The stock, remember, the stock gapped from a close of the 17th, still right before Christmas. The last price was $8.25, and the next day it gapped. It opened up at $9.27. So that's a dollar gap almost, right? So that's a dollar gap. So this area also, just like in the previous example, have to be filled. But unlike in the previous example, the stock didn't pull down. What happened is it continued to run up. But and when it eventually, and okay, let's plot right here. When the stock eventually did run up, you know what happened? It never came down to fill this area. See this right here, this is a void. This the area inside this box. This area has to be filled at some point, or normally. So we take it to March of the next year, it didn't get filled. We go into July the next year, it didn't quite get filled. Why? Because in order for this gap to be filled, this stock price has to come down to this area. It has to come down here and fill up. Now I did a video about gaps already on this particular stock, but I want to show you guys how effective this particular trading pattern is, and I'm going to show you guys how we made money in that. Okay, now the stock not only went down, but it filled this gap completely. As you see, it filled this entire box up. And this one I told you guys to buy. I told you guys to get in right here. I said buy right there. So, and for those of you who did buy, you made a lot of money who bought right there. Why? Because going back, this stock filled the gap right there. It went in, it based out on that gap. This gap. This is a nice support area right here. A very, very, very nice support area. So now what happened was, for those of you who bought, what happened? The stock ran completely up. It ran completely up. It went up from a bottom of $7 to $8, right around that level, right around where the bottom of the gap was at, and just ran up all the way from 8 to 10, a 25% movement within the next couple of weeks or the next month or so. So that's how important these gaps are. So had you bought right here, you could have held the stock all the way to the top of the trend line, which is right here. See, this is a previous high. So this is a previous high. So you could have kept all the way to the top of the trend line. And it's one more thing that would have told you guys to sell. See if I can get my cursor here. Which is what? Which is the stochastics. You see the stochastics are turning over now. This TTWO was in overbought territory for at least a week. Okay, now that told us that was a good time for us to sell. And what happens when we look at a stock and it's in overbought territory, as I have told you guys repeatedly, that's a good time to sell, especially when you see these large candles coming in, these reversal candles coming in. Anytime you see a dark cloud cover, you know, and you see these dark cloud covers coming in at the top of an uptrend under conditions where the stochastics are certainly overbought, that's a good time to come in. That's a good time to sell, especially when you're reaching or have surpassed recent highs. That's a good time to sell. But what we're going to do is just kind of look at this gap. Okay, now it's another gap right here. It's another gap with TTWO. So pay attention to this particular gap area. Pay attention to this particular gap area. This could possibly be the next trade, because normally, like in the past, this is an area that hasn't been filled yet. Now, will this stock pull down and come inside this box and turn around right here, around the 880, 890 area? Who knows? It may or may not. What we want to do is take a look at it. First, the stock has to break. Okay, now we just had a breach of the 20-day moving average exponential. These are daily bars. Now it's approached. Now TTWO now is approaching the 200-day moving average, as well as the 50-day moving average. That's beneath this stock right now. So it may sit here, and it may breach. And if it does breach it, it may sit right here or come to fill this gap. But whatever the case, if that does happen, then this is a tremendous buy opportunity. This will present a tremendous buy opportunity for you guys. And we're going to plot on our website. If the stock does come down, and we're going to buy right here, because at that time the stochastics would have turned over. The stochastics would be in oversold territory, because it would drop below the 20. So that'd be a good time for us to buy. So this is a setup that I want you guys to look at. Today's date is 10/19/2010. Look at this setup and wait for the stochastics to turn. I already got you guys in right here. If you remember, I got you guys in right here. I told you guys to buy right here. That made you guys 25% of your money. Now let's continue to watch now. So that what that means is that for every 10 grand, you guys made 2,500. So that's the 20%. That's the 25% movement. But there's more money inside. Now we see a pattern. If you look, guys, you will see of different patterns here. We see a trend line here. right? Look at this trend line here. We see a nice, we see an upward trend line here. You see the stock. Remember I told you guys about upward channels. That's a nice upward channel right here. Support, resistance, time and time again. Buy here, sell there, right? Buy, sell, right? The same. Okay, now we see the stock just kind of broke down, but then we seen just a straight up movement based off of the support that was established way back here. So now, once again, we see the stock pulling down. So we want to keep a look at it. We're going to put it on the front of our website. Take a look at it, guys. This is www.tradingstockslive.com, your premier source for day trading educational material to make real money from the market.